So, hi guys, welcome back to the Max Spence Business Podcast. I'm your host, Max Spence, and today we have a very special guest, Chad. I'm actually going to let you do the introduction for yourself. So, why don't you tell the viewers a little bit about who you are as a person and also what industry you're in business you are?
Sure. Thanks, Max. I really appreciate it. Yeah, so Chad Robinson, I'm the president of 360 Best Interest Mortgages and as well as a mortgage investment corporation called Align. And and really, I've been a real estate entrepreneur since pretty much the day I was born. As I've grown up, I've worn different hats. I've built properties, I've severed properties, and all kind of flips, and you name it, I've done it. But primarily, I'm in the money lending business, whether I'm brokering a deal to a bank or a private lender or creating a capital stack for a client. I'm really just helping people finance projects, and that's what my passion is.
Okay, awesome. So yeah, well, why don't we start from a little bit of the beginning? So yeah, what's your educational background? Do you have an educational background, or did you jump straight into real estate? And what were sort of the pros and cons did you find if you did have an educational background?
So funny, I grew up in a real estate family. So my parents own a real estate brokerage and have for since the 60s. And now they're kind of retiring and getting out of it. But I grew up in the business. And when I was a kid, I'm like, I never want to go into real estate. I never want to go into real estate. Like, screw that shit. You guys work too hard. I never want to go into real estate. And so I went into university and doing international business and economics. And I think I was 18, just about to turn 18. I realized I'm sitting here working at, I'll never forget it. I was working at a Shell gas station, no, Esso gas station. And I'm pumping gas and I'm whatever it was back then, $6 an hour or something like that. And I'm going, damn, this is hot, sweaty work. Bet you selling a house is a lot more money than this. And so I said, screw that. I'm going to get my real estate license and put myself through university selling real estate because I'll make a lot more money a lot quicker and I have to work less. And that's what I did. I went and got my real estate license when I was 18 and started selling real estate all the way through university with March break, Christmas, summertime. And basically the strategy I had when I was young was I worked when everybody else didn't want to work. So Christmas morning, you want to look at a house? No problem, I'm there. March break, long weekends, I'm the guy there and I was doing the open houses and back in the day, we didn't have the electronics that we have now and kind of the technology. So people were going to open houses a lot more. We had mall kiosks that real estate agents would host events at inside shopping malls. And so I would use that and I'd get a whole bunch of clients and I'd sell them over the next few months. And I paid myself through university and came out of there with really no debt, no money, no debt, lived on my own and bought myself a car and had a great time.
Nice, awesome. So I know that you said you were working at the gas station, that sort of, and you're like, well, let's go into real estate. Did you actually, at the time, were you thinking about anything else, or was it sort of like real estate has always been in your, mind since, your family's always been in it?
Well, real estate's always been in the family, but it's really entrepreneurship is what defines me. It's not as much real estate. It just happens to be where I landed. I've had a lot of different businesses over the years. I brought in computers from Korea and assembled them, and way back before Best Buy or Dell even existed. And so I've had a lawnmower business when I was a little kid. And so I've always been an entrepreneur. And so my strategy once I got into real estate was not to be in it as a career, but to use that as a stepping stone to network into some really, large corporations and do international business, because that was my belief back then and my goal. And then I just kind of fell into this and really got into brokerage, the money side of the business, which is what I really enjoy, and haven't looked back.
All right, awesome. So let's actually jump to, so you're 18 years old, you got into real estate. What were your first few years like in real estate?
It was funny. It was, for the most part, easy. And the reason why, because I was young and I hustled, and I would get the objection of, well, you're too young to own real estate. And then I just came up with really good objections. And there was, you know what, you're right, I don't own my house yet, but you're my only client. So I'm going to work my butt off to make sure I sell your house. And
okay, awesome.
yeah, and that worked. It was just, that was the shtick I used, and people liked the energy. And so I just, plowed ahead.
Awesome. So you were real estate for a bit, and then you made a transfer over to the mortgage lending side. So were you doing both at the same time, or did you sort of decide that which What made you sort of like one over the other?
Yeah, so I don't remember the exact date, but going back now, it's like 20 years ago. The only way to become a mortgage broker was you either had to become a real estate broker in Ontario or move to Seneca College near Toronto and go to school for 2.5 years in Seneca to become a mortgage broker. So like, move to Seneca, go to Toronto, or become a real estate broker. I'm like, well, I'm already a real estate agent, so that's pretty darn easy. So I got my mortgage broker's license that way. And I was running a company way back when that had both a real estate arm and a mortgage arm. And mortgage brokering back then was dealt with a fax machine. We didn't obviously we had computers, but it was we take a mortgage application and fax it to the bank. So very different than what we do today with all the interconnected communication. And so the mortgage brokerage business then was just in its infancy as far as A lenders are going. It was really a lot of just private, and you only went to a mortgage broker back when I started was, you were double bankrupts and that kind of stuff. So I was right at the beginning of how the industry changed, and I saw it changing and technology coming into it, and the real estate industry was also changing at the time, and it was going in a direction that I didn't like as much. It was less, more about commission rates and sizzle than actual quality. If not quality is not the right word, but it was less about customer service and more about price. And that's not the kind of person I am. I'm more about value and than a price person. So I closed the real estate brokerage arm that I had, and then just focused on the mortgage brokerage.
All right, awesome. So you started mortgage brokerage, and then when did you start? When did you decide that you wanted to start investing into property? Like, had your parents invested into property, or where did that sort of idea come from?
Yeah, my family's always owned real estate since the day I was born. So I was changing toilets with my dad when I was 6 years old. So that's been just bred with me since I was born. And myself, I started, I don't remember the first property I bought, 1920, bought something, moved into it, sold it, flipped it. There's always been a transition of homes and real estate, and it's just been brought up in it.
Okay, awesome. So what was so was your first like your own first personal investment? What was that? Was that like a residential building, or was it multifamily or office space, or?
It's a good question. So it depends what you define as investment. So I've had a bunch of houses that I bought and lived in, 6 months or 3 months or a year, and sold. It was more like a principal residence that I would, buy, renovate, and sell, that kind of thing. But I didn't really think of it as an investment as much at the time. It was just, I'm gonna make some money and I'm gonna live here. I'm young and I got time, so why not? The first really big property I bought, which would be today people today call it like investment property. It was a fourplex downtown on Preston Street, and I bought it because nobody could finance it. The deal had fallen apart 5 times. It wasn't a power sale. Was it a power sale? Anyways, I got it for a really good deal. Literally, there's a back extension on this fourplex that was falling off the building because somebody had built a 2-story extension on deck blocks. So there was obviously it didn't pass code, it didn't pass inspection. No bank would finance it. Like there was a gap this big between the extension and the brick wall. Wow. You could stick your arm through it. It was interesting. One of the tenants had 15 or 18 animals. There was like a couple squirrels. I think she even had a raccoon in a cage. It was a disaster of a property, which I loved. So, I brought in a couple investors in. We did something called hydro excavation because this is an old building downtown where we jacked up the extension. We brought this truck in that sucks out the dirt via high pressure water. So they drilled down with water, sucking out the dirt, and then poured concrete pillars and jacked up the extension with I-beams and all kind of stuff like that. Got it fire retrofitted and refinanced it 5 months later, taking out 120% of what. So all of our equity came back out, all of our construction costs, and we got cash out.
Wow.
So that was one of my first big projects.
That's crazy. Wow. So yeah, so I know we've talked previously, and you're the sort of type of guy that likes to take on projects where a lot of people are saying like, oh, we can't do that, or this is not going to work, or nobody's really interested because it's just so crazy. And you come in and you're like, well, we can do this and we can do that. And I think there's a way to sort of work around it and make it work. So that's really awesome. So do you still carry that mentality today that you sort of look for like, do you look for more cookie cutter, or do you look for more projects that are a little bit more difficult to go after?
Yeah, so up until about a few months ago, I was looking for projects that require a lot of brain power. Also, a lot of brawn, but a lot of brain power. Exactly that. Things that the regular clients don't want to do. An example was 2 years ago, was it 2 or 3 years ago, we bought five townhouses. They were power sale from a bank. They were almost complete. They were like 92% complete. The builder went bankrupt and didn't finish them. Like literally, it was you could live there, but it wasn't. They didn't register a few things with the city. They didn't close the building permits. They didn't register that some easements, and there was a few like minor things. But it was a $2.6 million project, so it was too big for most people and too small for the developers to take because the revenue model wasn't high enough to to make it a bigger guy excited. But for my group, it was perfect. You come in, apply some good capital, some intellectual ability, got all the severances done and the surveys and all that kind of stuff. Um, so I was doing that kind of thing. We did some flips and severs, buy a property, sever a piece of land. I like severance a lot because it creates value. And when I do invest in real estate, it's always about creating value. So something that more than just slapping paint on. I mean, something we're going to change the property. We're going to force appreciation by, building in another extension or, being hyper creative. That's what I really like doing.
Okay, okay, awesome. So the majority of where you operate right now is sort of like that little sweet spot between projects that aren't like a little bit too small and projects that aren't too big, where a lot of people sort of like this gray area you sort of operate in. What have been some actually? Do you have any interesting stories of other projects that you've actually taken on and done?
Yeah, I mean, so one of the really successful ones is a building. Funny enough, it's just on the market now for sale. Was my wife and I bought a surplus property that was a women's shelter, and it was a large, 7,000, 8,000 square feet building, and it was all boarded up, but it had a nice big side lot on it. And so we came in, we renovated the house right back to the studs, like literally ripped it apart, severed the piece of land, built two front to back semis on it. And we were the very first front to back semis going on in Ottawa. And so that was a challenge because we were breaking new ground, literally.
Wow.
And then we converted this building into a luxury sixplex apartment building.
Wow.
So it was neat. And the reason we won, we actually paid less for the property. Our offer was less than somebody else, but my wife, put a compelling story. It was one of those letters where, some of your clients, you say, oh, putting a letter doesn't matter, with the offer. It does. Sometimes buyers will be swayed by your story and what you want to do with the property. And that was the case in this situation.
Okay, okay, awesome. So yeah, I know you actually just gave a great piece of advice is when you're putting an offer and add a letter of a little bit of story about yourself to create a little bit better relationship. Do you have any other actual advice for, let's say, somebody wanting to get into the investment industry? Well, I mean the real estate investment world.
Yeah, so I always suggest to all my clients when I'm coaching them on the finance side is pick what kind of investor you want to be. And I know that starts off really broad, right? But people, and I had a call yesterday, the customer was like, oh, we're thinking of buying a 20-unit building in, out east in New Brunswick. And we're looking at buying a property in Ottawa to do a burr. And I'm looking at a property in Vancouver. And they're, completely all over looking for the best deal. And there's always deals to be had. Always. Good market, bad market, market escalating, going down. There's always opportunities. You just got to look for them. And so define a demographic. Personally, what I love to invest in as a tenant, I like, people 25 to 30 years old. They've just graduated school. They're the young millennials, or that's maybe Gen Xers now, whatever, but that age group. And I like those kind of tenants. They text me, they send me e-rents, e-transfers for the rent. And it's simple. They want clean, nice, make sure there's internet available in the building, and stylish because they want to bring their boyfriends and girlfriends and they want to be proud of their home. Other clients love student rentals. Perfect. You just pick a niche and get really good at it. So whatever that is, it could be, I know a lot of people make lots of money doing burrs, the basement apartments, suites. And some people love, like I said, the student rentals. Other people love rooming houses. And so there's a whole bunch of options. Just pick one and get really good at it.
Okay. Yeah, that's some great advice. So, the majority of what you do is you'd say multifamily. Have you ventured into the office or industrial or retail spaces at all?
No, I've been looking at it for a while. To be honest, I'm interested in industrial, maybe building some industrial units, a strip plaza, kind of light industrial buildings, not heavy industrial. I lend on it all the time. So as a lender, we're quite comfortable with those propositions. I'd be open to looking at something like a mini storage warehouse or one of those kind of businesses. The But I haven't seen something that's come across my desk that I really like. We had a property a couple of years ago in Hamilton that was a mixed use. It had retail and apartments, and but we ended up walking away on inspection. There were some major things we didn't account for, but that's about the closest I got on it.
Okay, cool. So, okay, so what I've got another question here. So, what do you love about real estate and business in general? Like, what are some characteristics that you love the most about it?
As an investor, I
Yeah,
mean, yeah, as an investor, well, I love real estate because it's get rich slow. And the mistake I think a lot of people make in real estate is they think, oh, I'm going to quit my job in 2 years. First of all, don't quit your job if you're trying to become a real estate investor. I need your job to get you good financing. It's a mistake I see quite often. And the banks really do not like professional investors. But every year, 2 years, buy a property, buy a single family home, a condo, an apartment, a townhouse, or fourplex, whatever your niche is. And you'd be really surprised. 10 years later, you own, you know, two, three, four, $5 million of the real estate. The mortgages are being paid off, and it's just slow and steady wins the race. And you look back 20 years later, and all of a sudden you're a multimillionaire, and your kids are inheriting generational wealth. It's not complicated. It's when people try to, make a rocket ship out of it and light it on fire and get rich in a year or 2 years doing real estate. That's when people usually get into trouble.
yeah. That's understandable. Yeah, I noticed from talking to different people, a lot of people, because real like you buy your, let's say you a normal route would be you go to university, you get your job, and you go you rent, and then you buy your primary residence, and people think like buying rental properties is very daunting. Um, but from your experience, it's not too hard when you put your mind to it and you just understand what you're doing first off. So I sort of want to talk about, so because a lot of people might have fear of jumping into real estate. How did you sort of overcome that? Let's say when you're because you take on these crazy projects that nobody else wants to do. Is there like a bit of fear? How do you sort of like mentally go through that to be like, yeah, I can make this work?
Sure. I mean, there's always fear, and funny enough, entrepreneurs tend to be more risk adverse. People think, oh, you'll take on all kinds of risk, and really we don't. We take on very calculated risk. I plan worst case, then I plan worst case again, and then I think, okay, if my worst case happens, am I okay? And if the answer is in yes, then I proceed. So not every project has worked out to get the yield that I wanted, but we've always made money, and investors have always had the return back. Might have taken a couple months longer than we expected, but because I've planned for that worst case scenario. You can't be rosy all the time, but there's a real good strategy for people starting, and especially young people. If you're in your 20s, and it's really simple. When you go to university, if you can, with your parents helping, because usually you don't have income at that point, buy a duplex, triplex, heck, even a single unit, live there with your friends, have your friends pay the mortgage because you're going to rent a room somewhere anyway. So you can buy a property like that with 5% down. It's called friends and family home. So again, 5% down, it's ludicrous. So we're looking at our daughter going to university in Toronto, and we're going to, hey, let's buy a condo there, and it will be my daughter's condo, but eventually I could see it becoming a rental property, when she's done. So you start at school, hopefully you can do that. But even if you don't, buy a property when you graduate, save up a little. 5% is not a lot of money. Usually your parents will hopefully help. And then get a roommate or two. Live a little bit cheap, under your budget. And this is the catch. People always want to overextend, and what you should be doing is shooting under. So get that townhouse, condo apartment, have a roommate for a year. Yeah, it sucks. But now you own this condo. live there a year or two. You have very little equity in it because you bought it 95% financing. Then you can move out and buy a little bit of a bigger house, buy a townhouse, upgrade. Now you have the condo, that's a rental. Now you're moving to a townhouse. Live there 2-3 years if you can. Have another 1 or 2 roommates. Pay down the mortgage, save up a down payment. Do it again. So all of a sudden you now have 3 properties. And if you never buy another rental again in your life, you're 25 years old, you own 3 properties, and you have 2 tenants. And I can guarantee you that over 25, 30 years, those are going to be worth a hell of a lot of money.
Yeah, yeah, that is true. That's it's crazy the price of real estate over when you look at it over 20 to 30 years, how much it increases, and especially if you're buying in good markets or like Ottawa or Toronto or these different locations.
Mm-hmm.
So that's actually a great plan of how to get into investing in sort of that area. So let's say somebody's already hit that point. They have 3 properties, maybe 2 or 3 properties, and they're like, hey, you know what? I want to go into real estate investing full time. And for me to do this, I'm going to have to start, to take on some of these bigger projects. I'm going to start, I'm going to have to attract capital. So how did you approach that situation?
So attracting capital is really about projecting confidence and knowing your stuff. There's a lot of money out there. There's more money than there is deals. Everybody thinks, the money's the problem. The money's not the problem. If you get a good deal, the money will come. So, you got to build your network. You got to get people that trust you and believe in you. And it's usually not your first circle of influence. It's usually your second, because the first circle of influence thinks of you as the whatever. You work for the government, or you're a plumber or a student, or whatever your day job is. That's what they think of you as. But that second circle knows enough about you that you're a good person, but isn't framed by you pigeonhole being, working for the government or wherever you're working. So you can go to them and say, hey, I've been spending all this time in education. I've been looking at these properties. I'm doing all this work, and I'm going to build this basement suite. Here's the contractors I'm using. Here's the plans. Here's the potholes. And a lot of people make the mistake by not talking about the potential potholes or pitfalls in a project, because then that raises my red flag. It's like, well, of course there's risks. What are the risks? Oh, the risks are we don't get our building permit. Well, what are you doing to mitigate that? Oh, I have the right designer that has experience doing these basement conversions. Oh, good. Okay, check mark. The pitfall is we're not going to get enough rent. Well, have you ran a model where we don't rent it for a year? Yeah, we did. Here's how the cash flow looks if that happens. So on and so on and so on. And you go through all those things and start by helping. So if you've never done a project before, just even really volunteer with somebody. Hey, you're doing a basement conversion and that's what you want to do. I want to help you. I'm going to work for free because I'm going to learn from you and hustle. And a lot of people don't want to do the work. They want to get stuff for free and, think, and I get it all the time. So, can I pick your brain and let's have a cup of coffee? I want to ask you how, you can raise $20 million. It takes effort. It's not going to get by a cup of coffee. You really got to work and give value. Give value first, then the knowledge and stuff will come. And that's a big long statement, but give value.
Yeah. No, that's awesome. That's why I love to have you on the podcast to sort of give that advice, because I know you have a lot of wisdom and a lot of advice from over your career. The career that you've spanned of investing in real estate. So I sort of actually want to talk on to pretty much like mistakes or anything of that area, because I think, a lot of people maybe get into real estate and they do well on the first one, or maybe they make a mistake on the second one, or maybe the first one, and then they sort of stop and they think, this isn't for me or anything like that. So I sort of want to talk about, like, have you made any mistakes and how did you sort of overcome that and sort of like mentally be like, I'm going to continue going forward instead of being like, you know what, real estate's not for me or something.
For sure. Yeah, I've made lots of mistakes. The biggest one was, like, I've overcome now by I was being overly optimistic. So when I first started that, my career in investing I'd always look at the rosy, everything's positive. And even when I'm saying worst case scenario, it was still a good worst case scenario. Now I beat the shit out of my numbers. And then I give it to somebody else that's going to beat the shit out of the numbers. And then I give it to the most conservative person I know and have them beat the shit out of the numbers. And then if it's still a good project, I come back and say, okay, now I'll work at it. So that's where the mistakes that I've made. Now, luckily, because I'm still inherently planning for worst case, it was never serious issues. There was never big serious mistakes. Uh, some of the things I've done where, we spent money up front and walked away from deals. It's not really a mistake. I think it was good lessons. Like the one in Hamilton, for example. We spent $10,000 getting an engineering report on the foundation and the structure, and looked at it and said, nah, we don't want to proceed. So it was a mistake. Cost me 10 grand, but I've maybe avoided a whole big project that would have been hundreds of thousands of dollars.
Yeah, true. So a big thing, so a thing that you notice is a lot of people make mistakes in the numbers. When they do the numbers, they be over optimistic when they're writing these numbers. So your piece of advice would be, go through the numbers, go through them again, and then triple check them 3 more times, sort of thing.
Yeah, and not just yourself. Like, you've got to send it to somebody that is going to be your counterbalance. Somebody that is pessimistic, that hates real estate. Have somebody chew the crap out of you in a good way, like, not yelling and screaming, but really challenge you, and to say, why is this building a good location? Why do you think this is going to happen? Prove it to me. Don't just assume. Who would have thought that COVID would have happened and student rentals would be tanking this year, right? Nobody would have thought that. In your wildest dreams, you would have never expected student rentals just to tank. But if you don't have enough cash reserves right now, there's going to be a whole lot of student rental housing coming in the market because the people won't be able. They were leveraged too high because they didn't plan for worst case. So, good tip for your investors: if you want student rentals, I think there's going to be a lot coming in the market.
True. Actually, yeah. Actually, I want to talk about that a bit. So, like, let's say COVID. What have you sort of like? This is, the last pandemic was, I think, like somewhere around like 1917, 1980, the Spanish flu, which was sort of similar sort of craziness as this. So the world hasn't really seen anything like this. Like we had the recession in 2008, which was more real estate, but it was more the U.S. market that got hit a lot harder. But with this pandemic, it's hitting everybody hard, and it's so what have you sort of seen from the real estate side of it?
It's a good question. So, obviously I'm watching a lot of economists and listening to a bunch of stuff and reading stats because that's what I like to do for fun. And there's no consensus. I think it's going to be really regionalized, more even hyper regionalized. So real estate always trends on population growth and employment growth. So if you really get back to fundamentals of real estate, that's what it comes into. Is the population of an area going up or down? And is income in the area, employment, going up or down? And usually if income and employment is going up, then population is going up because they're bringing in workforce, and then real estate values will follow that. All right, real basic real estate. And, come back to real estate 101. So the areas that are going to have employment affected by COVID, and this is what we really don't know yet, is manufacturing going to change? Are the cars, manufacturers going to change? Are they going to shut down? Maybe. Maybe not. Maybe they'll retool and start doing other things. Maybe manufacturing will come into Canada more, and areas like Windsor will be skyrocketing. We don't know. But what I do know is that the monopoly board of real estate, which everything had their hotels built and their little houses built, and you kind of just went along, and occasionally somebody died, and then a house would be sold. The COVID took the board and just shook it. Right?
Yeah.
All the rules that applied before no longer apply. People are just fed up. There's, businesses, I was thinking of retiring. This is the final thing. I'm going to retire. Oh, I'm so tired of dealing with tenants. This COVID stuff is just, screw it. I'm putting the building for sale. Right? So you're going to see shifts where they weren't being planned. And then, of course, there's a whole office question. Is the workforce going to come back to work in offices? Maybe, maybe not. What is it going to look like? It's too early to really know, at least in my opinion.
Yeah. That's I've sort of been asking. So I've had a few other people on the podcast and sort of seen like what their sort of points of view are, and so everybody's sort of similar. It's still a little bit. It's too early to tell. Like most things, like when I looked at the 2008 2009 recession, that sort of started in 2006 2007, and it took a year or two before it fell into like the worst of it. Which was, the worst of it, but for, let's say, investors that had a lot of capital that were interested in buying, that was a really good time because they could be buying stuff for, 50 to 60 cents on the dollar property.
Absolutely. COVID is going to be the biggest transition of wealth since the Great Depression. So the wealthy, unfortunately, are going to get even more uber wealthy. The marginalized people are going to be marginalized even more, and the middle class is going to end up getting sucked into this and paying higher taxes for the rest of their life, which is really, really unfortunate. And our government and CMHC and these kind of things are not helping them out. They're actually making it worse. The average Canadian is being pushed out of the housing market. Um, and that's really sad to see. So a little bit of advice, anybody like advocacy, email your MP, tell them to, beat CMHC up a little bit and allow for Canadians to buy houses, because really that's what people need.
Yeah, yeah. So I've seen. I know you're not like an economist or anything like that, but you are pretty well versed in the different areas of real estate and sort of looking up and seeing what's happening.
Yeah.
And sort of from what I've seen is like the government's injecting, putting lots and lots and lots of money into the economy, and it's like, where is this money coming from, right?
Yeah.
It's like, where is all this money coming from? Where is all this? So I know you said it's more speculation right now for the future, but is there anything else that you sort of see that could be happening, or anything else that you can sort of think
Yeah, I mean, it's a bit of a doom and gloom, and any economist will know this. The question is just when. The government's printing money. The United States is printing money, Canada's printing money, the whole world is just printing money. And our debt to GDP ratio is going out of control. You can't print money like this and not have repercussions. Now, they're hoping is that the money will stay in Canada and we won't have a full economic collapse. Maybe there's logic to it, maybe there's not. But inflation will come. You can't print like this and not have it hit. Is it going to be 2 years, 3 years, 5 years? It will happen, and when it happens, it's gonna be like a hockey stick. So taxes are also going to be going up, which again hurt the people, the middle class, the most. The bottom end of the income bracket is going to be protected with grants and all this other stuff and all this free money, and the working people are going to be paying for it. And the uber rich, there's always ways to hire enough lawyers to get out of paying taxes or pay as little as possible. So coming back to your point, own real estate, buy a couple properties, people, and it is a hedge against inflation. So if you buy a property today and inflation skyrockets, your value of your property is going to skyrocket as well. It's just the way inflation works. So again, another reason why I love real estate.
of? Okay, awesome. So this is a little bit. This is a question that's maybe out of context from real estate. I was just wondering more personally. Do you invest in the stock market or anything like that, or bonds or anything of that sort of nature, or you sort of put all your money sort of into the real estate market?
Yeah, not a lot. I dabble a little bit, and mostly around bank stocks. I believe in investing in what you know. So, I'm not an expert in the stock market. I look at it in the fundamentals, and a lot of them are upside down. The basic economics of many of the companies just aren't there. And when I went to business school, and you look at profit and loss and PE ratios and those kind of things, those don't really apply anymore. There's so much emotional influence in the stock market. It's ridiculous. But I can look at things like bank stocks that I know I work with every day and saying, oh, they're undervalued, or they're really stable, or they're not stable. Again, it comes back to invest in what you know. So I put most of my money in real estate, in lending, in second mortgages, first mortgages, private lending. We get great returns. We're 8, 9, 10, even 15% interest. So I work with investors' money all the time on that. And that's really where I'm moving my investments to, is even more is in that space, because I know it, and I can give good advice. And do I know, is this stock good or not? I don't know. I can't. I don't live it and breathe it every day, but I do real estate and mortgages. So.
Okay, awesome. Yeah, I was just wondering, because you're very technical analyzation sort of person who's really good with numbers. So yeah. So let's jump back to real estate. Do you have sort of like a procedure that you have for, let's say, when you approach an investment property? Like, have you created a procedure at all, or is it sort of just is it just like sort of muscle memory now? You know exactly what you need to do, what you need to look for.
It's both. So now I'm at the point of the investment career that I'm just not looking at anything unless it's major enough. So now I wouldn't be buying probably anything under, personally, or like my group, probably 5 million. And it's just because it's just a number of time. If I'm not working on my mortgage fund and I'm working on a real estate project, it needs to actually be worth my time enough to divert. but it comes back to, is it in that demographic of that physical location? So for me, it was in Ottawa. I know Ottawa. I love it. I would also do Kingston, just because two markets I know really well. And it'd be a demographic of downtown core that the millennials would live in, and can I add value to the property? So is there something I can build or sever, or that kind of thing? I love change of use properties, because again, you're doing forced appreciation. But that's my model. That's not necessarily the only model or the right model. There's 1,000 different models out there. And if you go on a real estate podcast like this one, which is awesome, I'm really glad you're doing this, is people will hear, oh yeah, I like that, or I love students, or I love the short-term rental market, and that's challenging now in a lot of cities. You'll find what you connect with, and then just become an expert.
Okay, awesome. So you actually, thank you for that. That's some great advice. So I know you touched on it a bit there with you said that you invest into the mortgage industry for first and
Yeah.
second. So how did you actually? How does somebody? I've to be honest, I have no clue anything. Like I've heard about a bit about it from let's say Bigger Pockets or other investors talking about it. But how do you actually get into that sort of industry? Is that where you're actually lending money? Like somebody comes to you and you lend your own personal money, or are you already investing into already mortgages that have already been set up or something?
So both. So there's a bunch of ways to get into. And funny enough, I actually have a book that I just finished writing, and it's being edited right now. That will be coming out shortly. So not sure the title yet. So I might even get your help on that, is get some feedback on titles. But it's going to teach people how to become a lender, how to do private lending. But it's really simple. You can use CAS or RSPs. A lot of people start with their RSPs, whether that's just RSPs, it could be LIRAs, so locked in real estate, locked in registered accounts, or ESPs, TFSAs, any registered product. You put them with a self-directed institution, something like Olympia Trust is a good example of one. And then you phone up a person like me that says, hey, I want to lend this money out. And I have an interview with you, and I'll say, what's your risk tolerance? When do you need this money back? And this is a key component. If you're thinking of lending money, you really got to switch gears. And this is a big challenge for people, because they think like a real estate investor, not like a bank. So when you're lending your money, you got to think like a bank. If this person, is it a good person I can lend to? Do I want this property? Can I sell this property? Versus, I see this real estate opportunity. So it's a little bit of a mindset shift. Quite often, I'll have a client will call me and say, Chad, I have 100 grand in my RSPs. I want to lend it out. I say, great. We have a talk about risk. I find out where they're comfortable at. Do they want first mortgages at 6% interest? Or do they want, bridge loans and stuff that are higher, 15, 20% interest? And I find out where their tolerance is. And then, in a day, 2 days a week, depending on how busy we are, we'll have mortgages come along, and I'll place the mortgages and put them there. That's one scenario that's really easy to do. The second one is pooled investments. So, for example, I'm just opening up a mortgage investment corporation where people come in and they put their money into the pool. It's RSP eligible as well. And then the whole pool, the management company, takes care of finding those deals, administering the deals, dealing with the borrowers, and then they just get monthly or quarterly dividend checks. So there's both options available.
Okay, awesome. That's really interesting. I heard about it a bit, but hearing it from you, that's awesome. Thank you for that. And that's awesome that you have a book, actually, because there's tons of books about real estate investing, but I haven't really seen any books. Well, I haven't really looked up, but when I'm looking for real estate books, there hasn't been many for mortgage lending or that sort of area.
Really not. And there's one a couple years back called the RSP Secret, which was really good. He did a really great job. It's quite old now. And I haven't seen anything that gives a balance. Like, mortgages can be boring, let's face it, right? They're not exciting products, but you're yielding 6, 8, 10% interest on really good, if you do your job right, very, very low risk assets. And I love it. Like, my family and my investors have made boatloads of money lending in mortgages. And you just clip a coupon every year, 6, 8, 10%, and the RSP grows and then grows and doubles and then grows, and it's awesome.
Wow, that is really interesting. I'm amazed by that, because I don't know, I haven't heard too much about that industry, and it's always awesome to learn new things about new industries. So which one do you actually do more of? Or are you I know that you're a mortgage agent and you have your own company. Do you do more real estate investing, or do you do more mortgage? More
Sure.
let's say lending money or running your mortgage company. How's
So
your sort of
now I'd
practice
say
look?
I'm like, 90% mortgage investing and running the mortgage brokerage business. That's really where all my focus is in the last, just because it's where my passion is lying now. In the last 5 years, we've built, I don't know, 14 houses. We've done a bunch of conversions. We've done property severances and all kinds of stuff like that. But it's really doubling down now on just the private lending because there's such a demand. There's not a lot of expertise in the market that really good people. I mean, there is other people besides me, of course. I'm not the only person, but that focus on private lending. So, and really taking care of our investors. At the end of the day, there's always an element of risk. Borrowers can get hit by a bus, and who knows what happens. But that really focus down on the private lending side and teaching people like this how to do private lending and what's great about it and where are the risks. And how do we, again, earlier conversation, how do we mitigate those risks? That's where I start with is what's the worst case scenario in this mortgage? It's not, you don't just focus on the rate, you focus on, will you make your money and can you get out of it? So.
Okay, awesome. So we're coming to the end here. What are you've done a lot of amazing stuff. So what's sort of next for you? Like, what are some next projects or anything in the works? You have your book that you're finished that's coming out. Do you have like a podcast, YouTube? Are you doing any new projects?
Yeah, for sure. So, I mean, obviously the book releasing is a big thing. That's been a life goal that I'm finally getting done. Opening up this mortgage investment corporation has also been another life goal that I'm achieving in the next probably 2 weeks. So those are two big. Thank you. Yeah, two big life goals that I'm checking off. I do run a podcast as well. It's called The Practical Broker, and on YouTube and all the various podcast accounts. And so I'll have to have you on my show and flip this around a little bit. That'd be awesome. And as far as other projects goes, no, really my focus now is on the MIC and syndicated and direct lending. So that's my real big focus.
All right, awesome. So before we end here, where can people find out? So you said The Practical Mortgage Broker. Where can people find out more about you? Do you have like an Instagram, Facebook, LinkedIn?
For sure. So the podcast is called The Practical Broker. And my mortgage site is bestinterest.ca, where Best Interest Mortgages. And if all that fails, just Google Chad Robinson Mortgage, and you'll see me come up in 10,000 pages.
All right, awesome. Thank you very much for coming on the show.
Perfect. Thank you very much. I appreciate it.